Hi, welcome back to Let's Talk Forex. I'm Alison, and as always, I'm here with my co-host, Chris. And today we're going to be talking about Trump and whether there's a pattern emerging in the Forex market in terms of the policies he's making. So, Chris, it's been 2 months since Trump's return to the White House, and markets have definitely been reacting. The big question, though, is there a pattern emerging?
That's a really big question. That's something we're going to go into today. There's been plenty of market movement. We've seen huge shifts in the USD, and we've seen also reaction in equities and crypto as well. So let's break it down. Let's get into it.
So let's start with what's happened since Inauguration Day. Obviously, when Trump got in, he started signing hundreds of executive orders. What are your thoughts on this?
Yeah, so as you say, it was all about executive orders the first day. I mean, there was discussion on deregulation, tax policies. These had an initial impact. There wasn't any executive orders on tariffs. There was a lot of discussion around tariffs. And the dollar initially strengthened as was expected, as a lot of analysts expected it to continue doing. And markets, they were pricing in this pro-business stance, and they were pretty excited. But uncertainty over these trade policies and over tariffs, something we're going to get into, has certainly kept volatility high.
Yeah, and what about inflation? I mean, we've seen a lot of interesting price movements there.
Yeah, exactly. The bond market is already pricing in more government spending, and this is likely to push inflation higher, and that's going to put pressure on the Fed to respond. And so traders are going to have to be closely watching the next move of the Federal Reserve.
Yeah, and I think one of the biggest stories has been Trump's trade policies. Obviously, he's already signaled a return to I guess you would say protectionist policies. Just to be clear, we're recording this on the 4th of March, just in case you're watching this, a little bit later than this date. And Trump last night placed 25% tariffs on Canada and Mexico. And he also placed an extra 10% tariff on China on top of the 10% he announced last month. And yeah, so these came into effect basically at 5 a.m. GMT. And what are the effects that you've noticed so far, Chris?
Yeah, well, the dollar's reacting strongly as you'd expect it to be.
Yeah, it's been quite surprising this morning, in fact, to see that sharp dollar fall. The USD just now actually made a huge upturn. It was also very interesting.
Yeah, it did, as we were talking. And traders are worried. Investors are worried. Nobody likes to see these tariffs come in. So I think we're seeing that impact.
But we've also seen some early tensions between the US and China.
Yeah, absolutely. With these new tariffs on Chinese imports, China's already responded almost immediately with a 10 to 15% tariff on all American agricultural goods. That includes soy, corn, etc. And the United States is the breadbasket of the world in many ways. So that's going to really hit the American agricultural industry quite hard. But this is also all of this tit for tat, this beginning of a trade war has created real uncertainty in the stock market and in the Forex market, as we were just talking about. And that's particularly in the Forex market, particularly for the yuan and other currencies tied to trade. But the real impact, I think, we've seen in the stock markets this morning.
Yeah, that's right. So if you look at the Hong Kong's Hang Seng and mainland China's CSI 300, they both fell today. And Japan's Nikkei 225 slid 1.2%, while Australia's ASX 200 fell 0.6%. And the declines across Asia also, follow the steep falls on Wall Street, where the S&P 500 closed almost 2% lower than previously, and the Nasdaq Composite fell 2.6% after Trump confirmed late on Monday that these tariffs would go into effect.
Yeah, markets are very unhappy, especially US markets. Yeah, and in foreign exchange markets, you've seen the DXY, as we mentioned, has fallen quite sharply. It was a 0.8% fall yesterday. We've seen another further fall, 0.2% today. The Mexican peso, as you'd expect, has weakened, has dropped 0.3%, and the Canadian dollar has also dropped as well, though it has recovered somewhat. So yeah, we're seeing major moves in the forex markets as a result of these tariffs.
as expected, we might see supply chain concerns as well. They're going to be hugely affected by this. The last trade war really disrupted the global supply chains. What are the effects that we've seen this time?
Yeah, so we've seen some early signs of that. Import costs are rising across the board, and this will add to inflation pressures as well, which is something the Fed, as we already said, is going to have to worry about. Companies are already rethinking global sourcing strategies as well. You'll see a lot of that. A lot of companies will have already priced this kind of action in, and they'll have plan Bs, redundancies and backups. But it will increase the volatility in manufacturing-linked sectors.
Yeah, and the tech sector is also under huge pressure, understandably.
It relies heavily on international supply chains, so it's very sensitive to these kind of things. And it's been having a really rough time. You also got to remember that the tech sector in the United States, NASDAQ in particular, has been sucking in cash from all over the world, from investors all over the world. So it's really the price is sky high at the moment. So there was always, any kind of wobble was always going to lead to a drop. And I mean, Nvidia stocks fell 8% yesterday. I know they're particularly volatile at the moment, but it gives you a kind of idea of the panic this is creating in the tech sector. Companies with any kind of production in China as well are going to be under particular scrutiny here. On the flip side, though, defense and energy stocks are doing very well this year. I mean, welcome to the new world. So this is due to Trump's stance on military expansion and domestic energy production as well.
Yeah, I mean, the international policy on the Russia-Ukraine war has moved significantly, and as you say, it's given a huge boost to the EU defense stocks and the euro, which is maybe what we're still seeing the remnants of now in the euro USD. And with the US suspending military aid to Ukraine last night, traders are betting that the EU will increase spending significantly to fill that gap for support to Ukraine as well.
Yeah, exactly. And I think this is probably what you're right. I think we're seeing this lift in the euro today and the last few days. I think since Zelensky and Trump's showdown in the White House, we've seen the euro do quite well. And this is, I think, for a couple of reasons. I think traders are hopeful that all this talk about ceasefire and peace and all of this kind of stuff is going to lead to some kind of action. We are going to see peace in Ukraine at some point, one way or another. But also this increased spending in the Eurozone that we're going to have to see with increased defense budgets as the EU tries to fill that gap left by the United States and Ukraine should provide the EU with a big boost in growth, which has been really lacking, something that we've seen over the last year. I mean, the growth has been moribund across the EU. So this may change that quite significantly.
Yeah, and then if we look at crypto, that's another huge sector that we've seen huge changes in. And Trump's stance has been evolving since he started in the White House, and yeah, that's added a hell of a lot of volatility to the markets.
Yeah, exactly. Trump made it clear that he wants a more lenient approach to crypto once he was elected, especially compared to the previous administration. Biden, as we've talked about before in this podcast, was very restrictive on crypto. He kept a very close eye on it. And this has given Bitcoin and other digital assets a real boost, especially in the post-election build-up to inauguration. But there's still a lot of uncertainty surrounding this. Is Trump? I mean, he's talked a lot of talk. There's been a lot of bluster, but there hasn't actually been any real action yet. So is he going to regulate stablecoins? Is there going to be a crackdown on offshore exchanges? He made a statement over the weekend, and this will help calm nerves in the industry. But I think he'll need to do more if there's going to be any real support to Bitcoin prices.
As you say, he made that statement about the strategic reserve of cryptocurrencies. Bitcoin was up over 10% after a month of declines, although I think it's stabilized again. But I think a lot of the crypto community, felt abandoned, I guess. And there was a lot of concern over the way, Trump and his wife, Melania, released their coins, and the pastor jumped on the bandwagon after the inauguration. So I think it's left a lot of people feeling a bit uncomfortable.
Exactly. I think that's right. I think a lot of people are concerned. And then, of course, you got to remember there was, what was it, a week or two ago, there was this huge theft from that UAE-based crypto exchange. I think they lost about $1.5 billion in crypto. So, yeah, so the crypto industry, I think, is feeling a bit shaken at the moment, and you can see that in the declines. But then Trump's come out and he's made this statement, and I think it all depends on what, he can talk all he wants, but we need to start seeing action. Otherwise, crypto is all about sentiment, right? And if crypto traders feel that he's not going to follow through, then it can lose value very quickly. So it's really about whether he's going to take any action anytime soon.
Very much about the image.
Absolutely. So, Alison, if traders are looking for trends here, I mean, that's what we're supposed to be talking about here is patterns. What should they be keeping an eye on here?
Well, I guess, what we've spoken about a lot is Fed's response. If inflation keeps rising due to the increased tariffs and increased government spending, then rate hikes could obviously put pressure on risk assets, and a hawkish Fed would push the dollar higher, which is kind of what I'm expecting to see. And this will make forex conditions more volatile, which obviously provides good trading opportunities.
Absolutely. No, I think that's right. And then there's China, there's this trade war, and not just China, but Canada and Mexico as well to a lesser extent. If this trade war escalates further, I think we could see serious weakness in emerging market currencies and possibly capital flight to the dollar as a safe haven. So further strengthen the dollar. And there's something we were talking about before we went on air, Alison, is there's a real possibility of China letting its currency devalue. And I think that'll weigh heavily on emerging market currencies. There is one thing, though. I mean, it's something I talked about in my video last week, is that my recap for the month of February is that traders have to be aware that we're starting to see poor economic indicators coming out of the United States. Investors and businesses, they were already wary of the cost of tariffs. And we're beginning to see that feed into the economy. Now, we're beginning to see companies cutting back in spending, cutting back in employment, and you see indicators beginning to slip a little bit. And that's definitely something that traders want to keep an eye on. If that is exacerbated, and I think that's probably a lot of the reason why we're seeing this DXY weakness this morning, is that's feeding into this narrative of is Trump going to push the United States into a recession with this tariffs? I don't think he is. It's possible, but it's definitely something traders should keep an eye on.
And the other thing I think, just based on that is to keep an eye out on the NFP. So that'll come out, when you're watching this, it would have come out just last week, but that's a really good indicator. That'll give you an idea about the economic strength of the states. And another factor is geopolitical tensions. Trump's foreign policy approach is shifting, and we're already seeing an impact on oil prices, a huge impact on oil prices, in fact.
Yeah, we are. Yeah, energy markets are going to be really sensitive to these policies. I mean, so far we're seeing energy prices come down, but that's because Iran and Israel are kind of out of the spotlight at the moment. And once he directs his attention to Iran and Israel and the situation in the Middle East, this could really drive crude oil prices up. So that's something that commodities traders will need to watch closely.
And what about regulation? Trump's been rolling back some of the financial regulations, but obviously this impacts, banking, stocks, and of course lending policies.
Yeah, absolutely. I mean, we're expecting a looser regulatory environment, and this should boost U.S. financial institutions, but it could also increase systemic risks. And again, this is something I've talked about before, is he's also passed through a bunch of executive orders where he's trying to bring regulators more under executive control, so lessening their independence. And this is something that, senior investors all over the world have already expressed concern about. So could be in a period of introducing systemic risk and into regulatory policy. So not something to worry about now, but definitely something to keep in mind if there's any stemming from deregulation, any kind of market instability. And I think something that once these changes are made, once the genie's out of the bottle, you can't put it back. So it's something we're going to, the investors or traders are going to have to think about for some time to come, I think.
And finally, for crypto traders, I know we touched on it just now. What signals would you watch out for?
Well, you want to keep on any policy announcements around Bitcoin ETFs, for instance. I mean, this is where the institutional capital is, stable coins, exchanges. If Trump follows through on these statements and he actually starts setting up a strategic reserve involving, the bulk of it being Bitcoin and Ethereum, then he actually starts, putting the money where his mouth is, laying down policy for a more favorable crypto stance. Then we could see another wave of institutional adoption, and I would see another wave of, retail frenzy, and that could really drive prices higher. But right now we haven't seen that, so I would just wait before moving until you start seeing any kind of credible action from that.
And on that note, is there a pattern? we talked about at the top of the episode. We definitely see markets shift in response to Trump's policy. But I think what we can say with certainty is that there's only uncertainty.
Absolutely. I think that's right. I think that's the pattern. I don't think there's any real pattern that you can pretend to see at the moment. There's a lot of uncertainty. The key for traders is to stay flexible, watch signals. Markets are still adjusting to Trump's return, and they're going to be for some time. And I think it's probably not until this summer, actually, where we're going to start seeing any kind of real pattern emerging, where we're not just dealing with uncertainty all the time.
Yeah, and it's very different to his first term. He's come back in with a bang. So
yeah, certainly with a bang.
Yeah. So I think that's why staying informed is crucial. Watch the news, keep your finger on the pulse, and remain flexible, as you say. Thanks so much for joining me, Chris. Great episode.
Always a pleasure, Alison. Always a pleasure. Speak to you next week.
Great. Well, that's it for this episode of Let's Talk Forex. If you have any questions, please don't hesitate to contact us. And if you like the episode, please give us a thumbs up and please remember to subscribe.